Welcome everybody. As we stated in the previous webinar, this webinar will run for around 30 minutes if you've only got 30 minutes available. If you've got a further 30 minutes after that, so for 90 minutes, we're going to be around, we're going to talk a little bit about regionalization, and we're going to have a slightly longer period of time for questions afterwards. I realize there was quite a lot of questions last time that didn't get covered. So without further ado, I will hand over to Chijas to take us through today's webinar.
Welcome, everyone. So nice to see you all again. I can see a few familiar names, which I saw last time. And I'm really happy to see all of you have come back. Today's webinar is a little bit more complex and a little technical because we're going to start talking and diving into INPAS. Now, some of you who may be new, just very quickly, you can just keep going the next slide. And Ross, did you say this webinar is for 30 minutes and then an extra 30 minutes? Okay.
60, then 30. And if I
Okay.
did say it wrong, I apologize, but it's 60, then 30, definitely.
All right. So I have to talk for about an hour and then I am going to stop talking because I don't think I can talk for more than an hour without starting to cough. But those of you who are new, INPAS is recently published. It's a sector-wide guidance for whole of entity financial statements, and some of the basic ideas about INPAS were already discussed. Hopefully, you have had the time to look at the recording because you know a lot about INPAS was discussed there. So we're not going to in the interest of time, not going to repeat that. We're going to move on to the next slide, which is about what INPAS consists of. And as those of you who were here last time, I was wondering why there is a distance between group H and group Z and Z. That is because the makers of the standard hope to add to groups, if there are new things that come up and need to be, included in the standard. So that is the reason why group H then jumps to group Z. I'm going to kind of focus on group C and group D today, which is revenue, and group C is revenue, group D is expenses and liabilities. Essentially, everybody knows if you have a finance background, even if you are not, and have looked at financial statements, it consists of two main statements: income and expenditure account, and a statement of financial position, also called the balance sheet in some places, which has assets and liabilities. So essentially, the entire world of accounting is actually condensed into these four aspects. The two main, very, very important aspects for nonprofits are revenue and expenses and liabilities. Revenue has evolved over the years. I mean, what started is just charity and simple philanthropy and donations and, just people coming in. In India, in temples, we have these really big boxes. So do churches, I believe, where there are people just put money in it, and that's your revenue. But it has evolved. Now you have outcome-based financing and you have development bonds and whatnot. And then in India, I don't know in other parts of the world if that has come up, but we have a social stock exchange, which is a way in which NGOs are getting funded now. So revenue is very complex, and INPAS recognizes the fact that revenue is very complex, which is why it's one of the biggest, longest chapters. Group D is about expenses and liabilities. Expenses and liabilities have been taken together because there are certain liabilities that arise from expenses, like provisions, contingencies, income tax. Sorry, I have a slight cough today, so if I break for that, please allow me that. Okay, let's, just like last time, if you have any questions, it'd be great if you can drop them onto the chat. If you are specific to this topic, it would be great if you're talking about anything which is specific to the topic that is being discussed. It would be really nice if you put them in the chat while talking. Yeah. Now, if you're going to So what I've done is I'm going to divide today's session into about 15 minutes each for revenue and expenses, just talking about what is there in INPAS. We'll also be looking at how there is a tie-in between the standard and the implementation guide. I believe both of these documents have to be seen and read and tandem. So if you're looking at revenue group C in INPAS, you must also look at revenue group C in the implementation guide. The implementation guide has very graciously helped and tried to include all sorts of aspects of revenue and practical examples as well. We are also at the end of this, just after revenue and expenses and examples are discussed, we'll look at the illustrated financials that are provided in the implementation guide at the end. These illustrated financials are very, very detailed. We may not have such detailed financial statements in when we actually make our financial statements through INPAS. Can we please move on? Okay, revenue. What is revenue to your mind? In India, or rather, if anybody is there from India or understand Hindi, we just say naam hi kafi hai, meaning the name's enough. We don't need any further classification, right? Revenue is just one group, C1, which has revenue. So there's hardly any other major classifications in it. Can we move on, please? And just like I told you, revenue has evolved over the years. What does the INPAS try to do? INPAS provides for processes for what to recognize as revenue, and what aspects of whatever you get into the organization. What is it? Is it revenue? Is it not revenue? Is it revenue in kind? It is revenue in cash. It kind of tells you what to recognize. Says when to recognize. When do you recognize this as a revenue in your books of accounts? At what point does it go into the income side of the income and expenditure account, or does it go into the liability side at some point? When does it go from liability to income, if it ever does? How much to recognize? So you've got some money, how much of it can be recognized as revenue in that particular financial year or in that particular reporting period? How do you record it? One of my trainees once upon a time told me that, ma'am, I really like all of your explanations and the concepts are all great, but what do I debit and what do I credit? Can you please tell me that much? So how do you record? And what is debited, what is credited? That is what, not in so many words. So INPAS doesn't really give that to you as in on a platter saying, what do you debit, what do you credit? It credits you with the belief that you know how it is to be done. And so how do you record? Where does it show? And how do you report? How does it look in your financial statement? So these are the things that we talk about when it comes to the revenue. The section begins on page number 89 of the INPAS standard, and in the implementation guide, it begins on page number 85. If you look at the standard, the structure of the standard, can we move on, please? Yeah. So what I'm trying to do is I'm trying to kind of, squeeze out all of the very basic things about revenue that are there in INPAS and put that in front of you. What revenue can be in cash or kind, money, or in kind, goods and services. I have some notes on the side, so please don't think that I'm not looking at somebody else. I'm just looking at my laptop in case I'm missing something. So, money or in kind, which is goods, services, or assets. Yes, we are also looking at services as a revenue. The INPAS explains how that has to be counted for and how that has to be measured. There are one of two types, right? A revenue transaction, a transaction which imposes, a transaction which does not impose. Performance, delivery, or fulfillment of an undertaking or promise. Yeah, I know, it's confusing. Performance, delivery, or fulfillment of an undertaking, it's all encompassed under the term that INPAS uses, which is called delivery obligation for a grant, and the word promise for a contract. A lot of back and forth went on during the PAG when we were talking about these terms. However, these have been very, very well defined within the standard. Revenue is used for expenses or purchase of goods or services or assets to achieve performance. It is also, in many cases, given out further as grants and donations. All of this is done to fulfill the promise or the delivery obligation. Revenue can be material, revenue can be immaterial. You can choose to not account for it, right? Depending on its on the criticality of the mission, on the value that it fetches in the market. So it's not necessary that as we all know, INPAS is flexible. It gives you a lot of scope of making your own choices, right? When we in India earlier, when we used to account for revenues, there was only basically 4 steps to it. Revenue is recognized when it is received. It's very simple. You don't even bother about accrual and is it receivable, it is not receivable, is it a liability, nothing of that sort. It is only recognized when it is receivable. Step 2, it is recognized to the expense or extent of the expenses. The balance is a liability, and whatever unrestricted goes into the income and expenditure account. However, this is not the ideal way to do it. This is how we used to do it in India. Maybe this is how it is done in many other parts of South Asia as well, because I have seen this happen in other places as well within my region. And, this is obviously not the right way to do it. There are a lot of aspects that you need to consider, especially because INPAS talks about being accrual based. Ross, there are 2 people who seem to be waiting. 2, 3 people. 3 people now. Okay, next slide, please. Yeah. Revenue, as per INPAS, has 2 distinct parts. Okay, it makes 2 fundamental distinctions. One is part 1, grants and donations. The part 2 is contractual revenue, which is income received in terms of grants and donations without giving anything in exchange immediately. Contractual revenue is income received in return of providing services, goods, either immediately or eventually, right? Now, again, questions, welcome. Wherever you have any issues, please let me know in the chat. If you're not able to hear anything, please let us know in the chat. If you want me to repeat something, please let us know in the chat. We'll do it. Without giving anything in exchange immediately is grants and donations in return of goods, services, or other assets, immediate or eventual, is contractual revenue. In case of grants and donations, it can be with or without a delivery obligation. In case of contractual revenue, it cannot be without, obviously. It's a contract. If you notice, the legal obligation to perform is not a part of the distinction, because even though grants and donations may or may not be a legal agreement per se written, it is still enforceable, right? How you enforce it and whether it succeeds, that's a different matter. But in principle, it is enforceable just like a contract is enforceable. It is also known as non-exchange revenue or non-reciprocal revenue or unrequited revenue, whereas contractual revenue is also known as commercial exchange revenue, depending on how it is looked at in your jurisdiction. Grants and donations, like I said, may or may not be bound by a written contract. However, contractual revenue usually is a written contract, but it can also, in some cases, be oral or implied, right? Defining this is very, very, very crucial when it comes to INPAS, because each of them have their own processes. Each of them have their own measurement and disclosure process. As we go along in INPAS, which is, as I said, a very, very long section, a very, very long group, INPAS has explanations for all kinds of issues that come in recognition. Some of them are, how do you value it? When do you recognize it? How much of it do you recognize? What do you do if there are 2 parts? I mean, there is some grant and some contractual revenue in the same agreement. how do you enforce whether the grant agreement is enforceable or it is not enforceable. There are aspects on capital grants, on multi-year grants, which are considered in INPAS. And like I said, if you read it in tandem with the implementation guide, all of these aspects are interpreted practically in the implementation guide as well, right? For part 2, for contractual revenue also, there are multiple aspects that have been considered, like how do you determine the transaction price? When do you recognize the revenue? So all of these aspects are taken care of in INPAS. Whenever you have, you look at, I mean, how do you practically use this? That is where the whole, that is what the whole question is, right? I mean, it's all, the principles are all well and fine, but how do you actually use it? That is where the implementation guide comes in. Can we change the slide, please? This is actually some of one of the best things that INPAS has done. This is part of on page 91 on INPAS. This is part of the standard itself. It basically is a 5-step model on how do you recognize revenue, right? In for both parts. So part 1, like I mentioned, grant agreements. Part 2, which I mentioned, are contract with customers. Now, how do you identify the existence of a nature of a grant agreement and with delivery contracts or contracts with customers? That is how do you do that is in part 1, in the middle column. And how do you identify a contract with a customer? So you look at the grant, you look at the agreement. How do you identify this? Now, this is again explained in a decision tree, which I will get to in a bit. The second step is identify the delivery obligations or the promises. Third step is determine the transaction amount or the price. Allocate the transaction amount to the delivery obligations or promises. And the last part is to recognize the revenue when or as the NPO satisfied the delivery obligations or promises. Okay, so this is the 5-step model that they have looked at. Each step is explained in INPAS for both the parts, for part 1 and for part 2. Let us look at the delivery obligation decision tree, which is something that I really liked. Is it going to the, it's supposed to go to the picture. Yeah, perfect. Yeah, so this is your decision tree. It illustrates how we apply part 1 and part 2. Right, I'm not going to go into the detail of this because I only had 15 minutes for revenue. I'm just going to make a list, look at the, yeah, I have some time. Okay. So we are going to go into this decision tree. As you can see, the decision tree is telling you at the end of it, how do you identify a transaction, a revenue, a grant agreement or an agreement, whether and what are the delivery obligations to it. Okay, does the grant or donation arise from an agreement? 2 options, yes and no. If it is no, then recognize revenue when NPO controls the research. So technically, it means when you have the money in your hand, right? When you have the asset, the money in your hand, that's when you recognize the revenue. Is there more than one component to the agreement, right? If it is arising from an agreement, are there more than one components? If it says yes, then you apply the steps that are there to each of the component, which is on the right. One after the other, these steps go along, and you can, at the end of it, identify which revenue transaction has a delivery obligation and which does not have a delivery obligation, which means which is an unrestricted, in the simplest form, unrestricted money, and which is restricted money, which is attached to a delivery obligation, right? So this is a very well-defined decision tree, which helps how you can account for revenue or recognize revenue based on whether an agreement has a delivery component or not. I apologize. Okay. Can we go to the next slide, please? Yeah. This is a basic explanation for revenue. I'm going to go into expenses. Expenses, as you can see, has been divided into 8 different parts. There is one bit about classification of expenses. Then you have expenses on grants and donations. May I have just 1 second? I think I will need to pop in a medicine in my throat because I'm not going to be able to speak without a cough. I am really, really sorry for this.
That's okay, teachers. We can give you 1 second to make yourself well. We all hope you get better soon. If you do have any questions while Tejas is going along, then do feel free to drop them into the chat. Thank you, Mohammed. That timing was perfect. And we'll get to those towards the end. So just make sure that they're stood up. So Mohammed actually has the first one. So any question after that will get answered, and we'll do our very, very best to get those all answered in this session for you. Yes, we did, Thomas, and there is a link just above Mohammed's message in the chat. If you follow that, that also has a link to the recording. If you didn't get that follow-up email, there was an email with the recording on and an FAQs of all the questions we we answered in last week's webinar. So that should get that.
I'm back.
You're
I
back,
do
Tejas.
apologize.
I will stop talking immediately.
Okay. Now we're going to go to the basics of expenses and liabilities. As you can see, there are 8 sections to it. We are talking about a lot of things in expenses as well. It is a pretty big section on its own as well. Overall, expenses are not that much of a matter of contention. We have had debates within the sector on presentation of expenses, more about how it has to be allocated and apportioned than about what is an expense, recognition of an expense. Most of the time, most organizations use a mixed presentation. If you're all familiar with the idea of natural and functional classification, we had discussed this also during the PG1 presentation last week. What is a natural classification? What is a functional classification? And what is a mixed presentation where you are using both? Most organizations that I have worked with over the years, very few of them are purely functional or purely natural. Many of these organizations that I have worked with have had a mixed presentation in their financials. In some cases, presentation needs allocation or classification is based on what is required statutorily as well. However, we are going to look at the fact that in INPAS, we could move on. Please. Yeah. INPAS brings in this concept of a rebuttable presumption. What is a rebuttable presumption? It's difficult for me to pronounce it. Rebuttable presumption. That the reliable and most relevant information to users will be provided by an analysis of expenses based on the natural expenses classification. This is what INPAS says. We want you to classify your expenses as per their nature, as per the inputs that you are putting in the expense. So if it is stationary expenses, it is a stationary expense, is irrespective of whether it's a stationary expense for a medical clinic or for a school or for your field office or for your head office. It doesn't matter. A stationary expense is a stationary expense, and this is how it is going to get classified in the books of accounts. Yes, this is the presumption of INPAS, but there is a whole list of reasons why you can rebut this presumption and say, no, I don't think it's going to present my information correctly. The users of my information don't want me to only give natural classification. which is why I will provide a functional explanation to these classifications as well. In some cases, there is sector practice, which requires you to have a mixed presentation or a functional classification. In some cases, there is a statutory requirement. For example, in India, we have the concept of a charity commissioner, which is very different from a UK charity commissioner. The concept of the UK charity commissioner. It is based on the same principles, but it is quite different. However, there is a format that they give us, and that format has a mixed presentation. And because of that, most organizations who are registered under the charity commissioner have to present their annual accounts to the charity commissioner in that format, right? So if that is something that you have to do it, you revert the presumption. However, if you are doing a functional classification, then expenses will be segregated by function or by what the output is from that expense, meaning expenses of the health center or expenses of the school or expenses of the museum, and expenses which are related to certain staff functions of the organization, right? Like fundraising or communication or visibility, outreach, marketing, recruitment. These are activities or these are functions, right? According to which, however, if you're doing it like that, there needs to be a breakup between direct cost, shared cost, and support costs. All of these are explained, not just in INPAS, but there's also an explanation, a practical understanding of what it means in the implementation guide, right? INPAS also has some guidance on allocation and aggregation, the principles that you need to use to allocate shared costs and to apportion support costs and to aggregate all of those in the books of accounts. So this is what the basics of expenses says. In addition to this, there are a lot of other aspects of expenses that have been taken on by INPAS. For example, can you move on, please? Yeah, we have a very important section of expenses and grants and donations, because INPAS recognizes the fact that organizations are not just doing expenses for implementation. There are a lot of organizations who are mainly giving grants and donations further on to partners, right? Expenses on grants and donations are very, very well explained in a similar method that the revenue recognition is explained with a decision tree. Yeah, this decision tree is on page 127. We'll not go into it. It is quite detailed, but it illustrates the recognition, measurement, and presentation of grant expenses and what it is going to look like in the financial statements. There is a long section on fundraising costs, how it is calculated, and what are the disclosures. There are three main activities that are understood to be a part of fundraising. One is donation, gifts, grants, similar transfers which you receive. The other is commercial and trading income that you receive through fundraising efforts. And then third is the investment management. All of these are discussed in detail in INPAS. We also have within fundraising costs, there are various aspects that are considered, which are apportionment, which needs to be considered consistent and reasonable. So if you're apportioning the fundraising cost across projects, it needs to be consistent. All costs of fundraising should be part. So fundraising costs cannot be netted with the money that you get out of fundraising. So the grants, donations, any revenue, it's all shown as gross. So it's shown as gross revenue, expenses are shown as gross expenses. This is how INPAS requires presentation. There are some exceptions to it, which are also set forth in INPAS. The next bit is about employment benefits, which include short-term benefits, post-employment benefits, termination benefits, all of these discussed in detail. The general principle on employment benefits is that when an employee becomes entitled to the employment benefit, it is a liability. When they are paid, when these liabilities are paid, then it is an expense. Right? INPAS includes principles for recognition, measurement, and disclosure of all of these expenses as well. Employee benefits also include retirement benefits, all of the insurances that are necessary, all of the statutory statutory investments that are made by the organization for in terms of gratuity, and it also talks about how that has to be valued in some cases through actuaries. Yeah, so these are some of the things that are discussed in the expense aspect of INPAS. We can move on. Thank you. Yeah. Another bit which is quite interesting and quite detailed is provision inconsistencies. How do you recognize a provision? There are two aspects to it. Is it how do you recognize the initial measurement? That how much do you provide for? And what is the subsequent measurement when the certain issue, that the certain incidents or certain events that have or were supposed to happen, and then how do you measure it? How do you disclose it? Where does it show within the financial statement? Leases is a separate area that has been explored. It talks about recognition, treatment, and disclosure in the financial statements, and it looks at it from the aspects of the lessees and the lessors, right, in different types of leases, including sale and in some cases sale and lease back transactions. Okay, so when you sell it and then take it back on, right? So these are some of the aspects on leases. There's also a section on borrowing costs. So how much? So in case you're borrowing funds, what are the costs and how do you disclose those finance? How do you recognize them as an expense and how do you disclose them as a finance cost? Income tax is a pretty long and very detailed explanation. Current and deferred tax recognition. There's a entire section on measurement and impact of timing differences. So sometimes, when a financial year ends, you have paid a certain amount of income tax, and then there are timing differences for the next year. So these timing differences or temporary differences are discussed. Presentation and disclosures for income tax are also discussed. It is very important. Again, I will again and again stress upon the fact that just looking at INPAS standard will not do. You will have to look at it jointly, right? It's very crucial, otherwise the interpretation is not correctly done. Right. Now, I know all of this is very theoretical, right? All of this is very, very technical. Which is why in the implementation guide, we have a very specific examples on all of this. Right? Each of these sections have examples. And to be able to give you a little more understanding of what principles are to be used and how in an actual situation INPAS will be used, we can go on to the next slide where we will discuss some of the examples. Yeah. If you click on the link, we'll be able to open them. Yeah, you just go down. Did you open up the revenue ones, or I'm sorry, maybe you opened the pay ones as well? Or did I attach the wrong one?
I've got all three here, Tejas. Which one do you want to start with? Revenue.
Revenue.
Yeah, it's here.
Yes, perfect. Okay, so I started with this example 6. Can just go. Can you go back up? I'm sorry. The example 5. Is it there? No. So I have started with example 6, which I really like. It is because what they have done in the implementation guide is kind of kept adding on to these examples. So it's a basic example, then add on to the complexity and make life more difficult, right? So NPOs simultaneously receives and consumes economic benefits of a service potential delivery obligations fulfilled over time. So it receives the money and uses the benefits of or the service potential of the grant. However, there are certain delivery obligations which are fulfilled over time. An international organization enters into a grant agreement to provide X-ray machines, right? And they want 2 X-ray machines which are to be available at all times, right? The use of funds in the X-ray department is a single delivery obligation, right? So you just need to, you get the money. However, the process of ensuring that you buy the X-ray machine and it is deployed in the hospital or the department is an eventual obligation that is fulfilled over time, right? How do you recognize this? You go back to the section 180, 1.89 and see 1.95 of INPAS, which basically has the entire steps on what do you do, how to recognize obligations when you receive the funds immediately and the fulfillment is slowly over time. Now, in the same use case, sorry, this was a separate, the first case was different. The second case is a little different. NPOG enters into a grant agreement with a delivery obligation with a grantor to provide monthly training to a group of newly established entities. Okay, so now this means that it is not a purchase of a product. It is actually a service delivery, which is going to happen over 1 year, right? NPO fulfills the delivery obligation over time in accordance with paragraph C1 165A, because the service recipients simultaneously receive and consume the economic benefit. Each training is a performance, right? Each training is a delivery obligation fulfilled, right? The fact that another entity would not need to re-perform the training is when you say that this delivery obligation has been completely fulfilled. Can you go down, please? Yeah. So NPOG will then recognize revenue at a time by measuring the process towards completing and fulfilling the delivery obligation. So every time a training is completed, its revenue is recognized. So this is how the examples play out. There are examples on multi-year grants as well. NPOH has signed an agreement with a regional government and on environment protection, right? The budget, helps to meet the essential administrative costs. NPOH is able to direct the resources it receives from other sources towards costs associated with programs rather than administration, right? So these are some of the examples that they have used. This is a multi-year grant example. 5-year budget, which for these projects. Now, if there is a single delivery obligation, even though the agreement is for 5 years, how do you recognize it? Then the second case is whether there are multiple delivery obligations. Yeah, thank you. Required to reconfirm the budget agreement every year, saying, this year you've done XYZ, next year you're also going to do PQR. So these are how do you recognize revenue when there are multiple delivery obligations. In the first case, the NPOH will recognize the amount that becomes due prior to the region transferring those amounts as receivable with an equivalent reduction in delivery obligation asset. So in this case, if there is a purchase in asset, it will get reduced. The grant agreement contains multiple delivery obligations. The NPO will recognize end revenue for future years, not recognize it, but recognizes it at the inception of the arrangement. So some of these aspects, yes, I do realize that the language is quite, it's not complicated, I think, but it needs patience to understand. But when I started doing the implementation, or rather I started interpreting it for very, very concrete examples, which I tried to fit into today's webinar, but it wasn't possible, which is why I continue to focus on INPAS and the implementation guide. Because there are certain aspects. For example, I will just take very quickly one example. So one organization has received money from a donor for
is buying and installing solar panels on a community school. Okay. Now, the question is, this is going to create an asset. First of all, whose asset is it? Is a question which is separately handled. However, the organization is trying to understand how do you recognize the revenue for this transaction and when do you recognize it? Okay. So when the fund came to the organization, the entire fund was recognized as revenue. Um, the expenses were made against the revenue. There were certain aspects of the revenue, or rather the money that came in, the grant that came in, which was only for the administration and the management of the project. That was taken in as revenue. The rest was then removed because an asset was created. The asset was then transferred to the community. So these kind of complications need the guidance of INPAS, which is why even though the examples seem a little complex and a little theoretical, as we start going into it, as the adoption happens, this is going to become, much more understandable. And every organization which uses INPAS is going to bring in their own examples and their own, experiences, which will make interpretation much more efficient and easier. Example 8 has to do with a capital grant. A fund set up to support a local sports organization, right? Both organizations are subject to oversight by a regulator, and entities can appeal if there is any problem in the agreement. So all of these aspects are then included. This specifically is also has to do with enforceability of the agreement. So all of these aspects are included in these examples. If you go through them, it becomes more and more clear how INPAS has to be used. Right? I cannot go into each example. I don't really have time. I only have 15 minutes left on revenue and expenses. So we can move on to the other aspects. If you're feeling that this is going really fast, yes, it is going fast. It's going fast for me also. I am not really able to kind of tell you all of the stuff that I want to, because we don't really have a lot of time. Each of these aspects required easily 1.5 day of trainings, which I hope somebody will pick up, and it will be much more clearer if those kind of trainings happen. Can we go to the the expenses examples? Yeah. Example D1. Yeah, there's nothing. This is when it starts. Yeah. Here we are talking about how do you allocate and apportion lease cost for an office accommodation, whether it goes on a direct cost, whether it goes on a support cost, how do you divide it within the organization? So in some of these cases, apportionment, how do you do the apportionment is very simple, because we have been doing allocation and apportionment within the sector for a long time, right? We do allocation based on the space occupied. Sometimes we do on the number of employees or staff who are a part of a project. In some cases, we do it as a percentage of the program cost. It all depends on what makes the most sense and what is required by the donor as well. However, allocation and apportionment, as everybody knows, needs to be a consistent process. You can't keep changing your method of allocation. So in this case, they have explained how the lease cost is allocated. 25% of floor space is occupied by staff, 25%. So all of that. Below in the next page, they have a table, yeah, in which they have explained how allocation is done of the lease expenses. So this is an example. Sorry, can you just go up there? There's a chat that has come which is blocking my view. Okay. Cost allocation and aggregation of employee benefits is an example too, where this is not about employee benefits. This is about allocation of a cost of a chief finance officer, where, as we all know, most of the time the CFO's expenses are allocated. Oh, I see Samantha is here. I'm so glad to see you. Can you go up a bit, please? No, I mean, let's see the. Yes, these are from the implementation guide. No, I have not created them myself. These are, and this is the actual implementation guide text. It's not something that I made. So, yeah, like you say, I have answered that question as it popped up. Yeah. Here is the allocation method for the CFO. 60% is spent on managing the financial and 20% on managing program activities, etc., etc. So now, again, here they are also talking about how the organization presents it as a functional analysis on the face of the statement of income and expenses. By functional analysis, each of the 4 different program activities, right, which the organization is doing. Can you go down? And I think it is, no, okay. Yeah. As you can see, there is a long analysis. So in some of these examples, the 3 aspects of these examples usually is the situation, the analysis, and the conclusion. All of these examples have a lot of, small details that they have put in, which are real life examples. Most of them are based on what, people have contributed, is something that I um, believe I've understood from my time in PAD. There's a whole detailed list of things that the CFO does, and there is an allocation and an apportionment of table, which is right down, further down. 60% of the time managing finance again is further apportioned to 2 aspects. Where is it apportioned? It's based on the budget. In some cases, it sometimes in whether it goes in fundraising or whether it goes in program. All of these things are divided within the allocation process, as you can see in the table. There is also an example 3 of losses, writes-off, and unusual payments. Can we just go a little further down, or we can just go back to the, yeah, just go back to the presentation. Yeah. So as you can see, I have tried to explain to the best of my ability and the time that I have on how INPAS is looking at revenue and expenses. Yes, these can be made into tools. This can be made into, nice little Excel tool, which kind of gives you a good allocation parameter for expenses. Some of the tools that are used can make a tool out of the decision tree itself, which I think would be a really cool thing to have. However, till the time all of that happens, until the time adoption happens, until the time we have, eventually, slowly getting more and more people involved in using INPAS and making sure that it becomes more accessible through tools, this is going to take a little while. Because as we all know, the sector is so diverse and so big within Asia itself. Probably there are 4 different continents. So it takes a little time for organizations. It will take a little time for organizations to adopt INPAS. There will be times when many organizations will feel that INPAS do not fulfill any of the requirements that they have. However, we have, or rather, I again come to the first person, but I shouldn't. The makers of INPAS and the makers of the implementation guide, as well as the practice guide that we saw, they have all have done this through consultations, as we all know. So a lot of these aspects are coming from real life experiences of organizations across the world. When it comes to revenue and expenses, yes, INPAS does look a little complicated at the first read. However, for revenue, there are some of the aspects which are already being done. So it's not as if it's something that is very new. What we are trying to do, or what INPAS is trying to do, is to bring in consistency across geographies, across organizations, on how revenue can be recognized. If I look at my own geography, I find it very difficult to see organizations taking on the revenue aspect of INPAS and saying, okay, we will accrue revenue, because that's not how it has been traditionally done. That's not the sector practice. However, as and when adoption increases, the presentation of revenue will be much more efficient, much more comparable, and which is the reason why organization need to start using INPAS for revenue recognition as well. Yes, it's a challenge, but I think it will be something that NGOs will take. Expenses, again, are not something that is very, very different from what we have been doing traditionally. So, of course, there are very specific examples of expenses which are very well explained in INPAS as well as the implementation guide. So here was a little introduction on revenue and expenses. We are not going to go into details. Sadly, I am not even able to go into details of any one specific example. However, there are, these are out there for you to read. I have mentioned the pages. And now we can very quickly go into the illustrative financial statements that are there in the implementation guide, of what it looks like when you use INPAS to create the financial statements of an organization. It's a very, very detailed illustration. As you can see, it starts at page number 156, goes up to 182. It shows an income and expenditure account, statement of financial position, statement of changes in net assets, cash flow statements with both methods, the direct and the indirect. It has notes and schedules. The best part, what I really liked, was it has a reference to the INPAS section, which applies to that particular account head, and that is very, very interesting. So let us have a look at the illustrative financial statements. I only have 5 minutes for this sample. Sorry, I have overshot my time. Yeah, as you can see, like last time, Sam had mentioned that we only have one example of illustrative financial statements, which is too less. There are multiple kinds of organization, and it would be really nice to have much more details and various other examples of what INPAS. Hopefully, we will start getting real life examples of what INPAS based financial statements look like. As you can see, income is divided into 4 parts. Grants with delivery obligations, grant without delivery obligations and with restrictions, grants without delivery of obligations or restrictions. So these are 4 aspects that INPAS has taken into consideration. If you like, Ross, and if you are able to, you can move the cursor to the points that I am mentioning, then it will be easier for people to look at. Yeah. As you can see, there are the INPAS reference is there right on the last column, as you can see. There is also other income here, and revenue from goods and services, which is also there. There will be many other kinds of income. There will be organizations who will have income from sale of old assets. There will be revenue from a charity gala or a marathon. All of those things can very easily be used. The INPAS can be used to interpret those kind of revenues and fit them into all of these heads. Total expenses, as you can see, are by nature. Staff costs are separately shown. There is also a value of services provided by volunteers, which I believe should also correspond with donations in kind. Then there will be rent rates and utilities, all of these expenses that they have mentioned here. As you can see, again, against all of these, you will also have the INPAS sections. There is interest expense and total expenses, deficit surplus, all of that. Can we go up? Yes. By up, I mean ahead. Thank you. Yeah. We have foreign exchange gains and losses, loss and gain, disposal of plant, property, equipment. All of these aspects have been taken care of. Now, I will not go into things that we have not discussed. Otherwise, it will get more and more complicated. However, we have a detailed financial statement of financial position. Please go ahead. Yeah. You have non-current assets, current assets. This looks pretty much similar to what a regular statement of financial position is in an organization. But these are some of the aspects that we have not discussed, so which come from assets and recognition of assets and liabilities. There is also the whole fund accounting concept. So there are some of the very specific aspects, as we had mentioned last time. INPAS is based on IFRS for SMEs. However, there are some new aspects that have been introduced in INPAS. One of them is fund accounting. It wasn't part of SCR array, IFRS for SMEs. And fund accounting is a separate section. I would very much like to do that as a training, because it is something that most organizations are not doing, and INPAS is giving a very detailed guide on how it can be done. As you go ahead, some of these sheets are horizontal. So I would request you to kind of tweak your and rotate it if you can. Up the, yeah. As you can see, this is I think there is one more before it. No, okay. So this is the statement of changes in net assets, which they have very basically as per fund and reserves. The next statement, I think, has to do with the cash flow. Yeah. As I mentioned, there is a direct option, there's an indirect option. Some of these look very similar to what we have been doing traditionally. Operating expenses, activities, investing activities, and financing activities. The indirect option or an indirect method is also there, which is in the next part of the illustrative financial statements. The increase and decrease in various current assets, increase and decrease in current liabilities also. Again, divided into operating, investing, and financial activity. We can move on. This is the best part of what I really liked about these illustrated financial statements, because it seems like these are meant as a guide and not really as, there is so much information on this. I'm not sure whether all organizations or all auditors are going to want to put all of these information. But there's a lot of information on how, what are the accounting policies, how the allocation of expenses happens, there's between donors. It's a whole bunch of things that are there. Going into it would take a lot of time. This, again, I said, starts from, I think, page 156 to 182. So please go through this. This is actually very, very interesting aspect, how INPAS has tried, how the maker of INPAS has tried to give you an illustration of what it looks like. So this is where I'm going to end today. Yeah, thank you so much for attending to this webinar. The first section, like Ross had mentioned, we will like to talk a little bit more of later on. However, if People want to leave, of course, you're most welcome to. Thank you so much for attending. Hi,
Thanks,
Sam.
Tejas. Hi, Sam. How you doing? Right. We do have some questions, so I'm going to take the ones that were in the chat while you were talking, if that's okay, Tejas, and then we can take them from the floor if there are any more. So the first one is from Mohammed, and he says, in part one for revenue, it will contain the donors. Should it be a separate financial statement based on Practice Guide 1?
Ross, do you want me to take the question?
Hey, you can take one, and then maybe Tejas can take one. Yeah, sure, you can have this one, Sam.
Yeah, I don't mind. Ted, do you want to take that one? I don't mind. I
Go for
didn't
it,
see.
Sam.
Can you say the question again?
Yes, he says, in part one for revenue, it will contain the donors. Should it be a separate financial statement based on Practice Guide 1?
Right, that's a really good question. So no, the answer is anything that's for the whole, the guidance in that section is about how to show revenue in your whole of entity financial statement. And it's about revenue recognition only. It's not how you show accountability for that revenue. What Practice Guide 1 is about is a separate statement that shows here's the money we got and here's how we spent it and the fund balances for a specific grant or project or set of activities, which is both the income and the expenses associated with a specific grant, and it's a separate financial statement. So what's in that section is about how you recognize revenue in your whole of entity financial statement.
Lovely, thank you, Sam. Mohammed, can you give me a thumbs up if that answers that question for you? Then there's a load of people asking if we're going to share stuff. We are going to indeed share everything. Mohammed then had a second question, which we will allow him. In the UAE, charitable associations are allowed to retain 15% of charitable revenues to cover operational expenses. Very nice. Is there any specific NPES standard or guidance that addresses this type of deduction or treatment of operating costs related to donations? Beautifully worded, Mohammed.
No, it's a very short answer,
No.
because that's really a jurisdiction level. Tejas, you have something similar in India, don't you?
Yeah, we have something similar in India as well. And no. So this is again something that we will have to start looking at as and this brings us very well into the whole regionalization discussion that we wanted to have. But every jurisdiction will have its own quirks, right? So in India, we have the Foreign Contribution Regulation Act, which basically tells you we don't care about accrual, you have to account for everything on cash basis, right? So there goes INPAS out of the window for those kind of funds. So these aspects are not included. However, the principles that are there in INPAS will be used for deciding on if you're following INPAS, deciding on how these will be accounted for. There is no specific guidance if that is your question.
Lovely, thank you both. Bunmi says, what's the difference between NPAS and IFRS and IAS?
That's Sam's syllabus. You muted, Sam.
You're on. You started sharing your screen and then muted yourself.
Brilliant. I've got a couple of slides which I literally prepared the day before yesterday on this. So just very briefly, there's some new content in INPAS that is not in IFRS. For example, defining what a non-profit organization is, defining what should be in a narrative report, which is not in IFRS. Fund accounting is entirely new. There are these new sections about how to recognize grants and donations, which is not in IFRS. And there's some content in expenses. For example, as Tejas talked about functional and natural classifications, you're very clicky, Russ, and support costs. And then there's D2 about when to recognize grants given, again, is new. Fundraising costs is new. There's a section about defining control and the reporting entities. If you think of parents and subsidiaries, We don't have the easy mathematical idea of shareholding to help us define control. So how do we define control? And then there's this whole new section about how to create the link to any supplementary reports. The annex to INPAS does include a map and some of the key differences for IFRS mean. Then there's some new terminology. For example, profit or loss is now surplus or deficit. Subsidiary and parent are controlled entity and controlling NPO. Investment is a beneficial interest. Equity, as in the fifth part of the financial statement, that credit on the balance sheet that isn't liabilities, is no longer called equity, it's called net assets. And equity, where an investor has a right to the net asset, is called equity claim, which are expected to be very rare and immaterial in amount. Where IFRS has a cash generating unit for defining groups of assets to consider impairment, we now have an operating unit instead, because assets don't have to generate cash. And dividends obviously don't matter. So it's a new terminology. The financial statements have changed. The balance sheet statement of financial position is the same. The cash flow statement is the same, but the income statement is now called the statement of income and expenses, and the statement of changes in equity is called the statement of changes in net assets. And then these are some of the most significant modifications, which aren't completely new. But for example, adding service potential as a concept, which means an asset can have value, not because it generates cash, but because we can use it to achieve our objectives. The presentation of gains and losses, the disclosure of employee expenses, measurement of inventory that is held for distribution, not for sale, or is donated, deemed cost of donated physical assets. So again, there's some modifications there. Additional guidance on control, I've said some of these already. Transactions, disclosure about governing body members, and removal of share-based payments. So that hopefully answers your question. What are some of the key differences to IFRS?
Hi Sam, can you send me those couple of slides as well? Now,
I'm just they are about to be signed off by the CEO of INPRS, and then they will also be published on our website.
There you go, Mohammed. You can get them from the
horse's mouth. So you're about to not say horse's mouth, right?
No, I wasn't going to say that. But Mohammed can go and get them from the website that you shared earlier, Sam. Let me go grab that. And then there are no more questions other than a lot of thanks and Farah asking you when the next webinar is. So this is the last webinar, Farah, in this 2-webinar series from Humantum. There will be some in the new year, and I think there are some others coming up. I think Sam is on another one fairly soon. So if you're not following Sam on LinkedIn, etc., on the socials, then you should go and find Sam Masuki right now. Sam, do you want to drop your LinkedIn profile link in the channel so everyone can go and find you and follow you? And then you can find out whenever Sam is appearing. Yes, go ahead, Sam.
I just wanted to say one very quick thing about revenue, because it does look very, very complicated. And this is something that we've been trying to counter and whatever, because we don't want to make things complicated. So the first thing to say is that the thing that drives the complexity is not INPAS. You're clicking again, Ross. The thing that drives the complexity in INPAS is not INPAS itself trying to make things difficult. It's the reality of the nature of the grant agreement. So what drives revenue recognition is grant agreement complexity, okay? All we've done is consider what are some of the terms in grant agreements, and depending on what's in your grant agreement, that's how you have to then treat it. Now, one of the things that, the lights have gone off here, you can see I'm now in darkness. One of the things that is really important is that the most complexity around the revenue recognition is if something is a delivery obligation. And quite often, it won't be a delivery obligation. To meet the definition of a delivery obligation, we've made it quite tight. It has to be enforceable. How many grant agreements are genuinely enforceable? It has to be measurable so that you can actually tell if you've done it or not. It has to be sufficiently specific, and there have to be rights and obligations. You can see all that in INPAS. But what that means is that the really complicated accounting might only apply to 5–10% of grants. And the really simple accounting, which is just a normal, everyday restricted grant, and you can only spend this on X, but that hasn't got delivery obligations in, is really simple accounting. So I just want to make that clear, that don't get overwhelmed and scared by the complexity of the delivery obligation accounting. Hopefully it will only take place for a small number of grants. And from an advocacy point of view, I hope this is something that Humentum will pick up. We need to be advocating to our donors to have the types of grant agreements that don't result in complicated accounting. It's the donor agreements that make things complicated, not INPAS itself. So that's just one thing I really wanted to add on there.
I mean, to counter you though, Sam, I am seeing a lot more of outcome-based and delivery obligation-based grant agreements now than they were before. So I have a feeling that that is something that is going to be used a lot more now, because there are a lot of outcome-based grants. There are these development bonds that are happening. So these alternative forms of revenues that NGOs are or NPOs are supposed to and will have to look at, especially looking at the international scenario of grant of aid funding. This is something that will happen. So I think the fact that it is there in INPAS is extremely important, because it will be something that will be used as we go forward. That is my thought. But yeah, I mean, we have a bit on regionalization, which do you want to talk about, or do you think, do you want to, I mean, if there are no more questions, what is the time? I don't.
There are no more questions unless anyone wants to put their hand up, Tejas. There's no more questions in the chat currently. Thanks, Sam. So Sam has put her socials. Feel free to follow her. She is doing all things, and there are other webinars attached where she is present that you can go and find. Mohammed just says, thank you very much. As a representative of the Ministry of Community Empowerment in the UAE, would like to inform us that this is in line with best international practice, and we plan to implement these standards across the public benefit associations in the UAE as soon as possible. Mohammed, that's incredible. Thank you so much.
Thank you, Mohammed. This is so amazing. We have the example of Kenya. I think I saw somebody from Kenya when we were admitting people, and Sam had mentioned last time also how Kenya is taking this on, and there's going to be a roadmap soon, I believe, in January of next year or something like that. So I think a lot of countries are taking it on. However, I do feel that coming together as a region might really help the adoption of INPAS along. There are regional similarities, right? In, for example, South Asia, where I work in, a lot of our work in Nepal, Sri Lanka, Bangladesh, yes, the keyboard.
Sorry. So many messages to respond to. Okay, if there are no more questions, Sarah Sally Ross, you unmuted. I thought you were about to ask a question. Maybe you weren't. I'm just checking in with you. All right, I don't think she was. I think it was an accident.
Yeah. Okay. So
sorry.
Yeah.
I'm sorry. I was just listening. That was a mistake.
No problem. I thought you were going to ask a question, and I didn't want you to lose your chance. No problem. No need to be.
All right. Thank you. Thank you.
Yeah, I'm really glad a lot of people have stayed on within in the chat. Sam, do we have any movement on adoption in other parts of the world? Maybe that is something you can talk about, because
nothing I can share publicly yet. Lots of movements, but nothing that's publicly shareable yet.
Well, we know UAE are very supportive, at least because Mohammed came here to talk to us. So thank you for that, Mohammed. If there are no more questions, then I will say a deep thanks to Tejas for taking us through some of the implementation considerations of NPAS and her overview of the Practice Guide 1 in the previous webinar. And thank you to Sam for joining us once again and making sure that we can answer all the questions as accurately and as up to date as possible. So thank you both from us. And thank you everybody for coming and staying and listening. Let's keep the conversation going. NPAS has got a lot of potential and a long way to go. So if we all work together, we can definitely make a difference. Thank you all very much indeed, and we will see you next time.
Thank you.